Welcome back to another video, guys. This is one you really don't want to miss. I'm going to be going over around 5 different penny stocks. I'm going to be going over ticker RBT, trading at $1.09. This stock was just trading at $10 just earlier in the year. They just did around $180 million in revenue for Q2 2023. They are growing very rapidly. They have $204 million in total assets with a $70 million market cap. So this smart city AI company, Rubicon, just announced a 3-year partnership with Denver, Colorado back in June. Rubicon Smart City Technology is now powering the city and county of Denver's entire solid waste and recycling fleet of more than 150 vehicles, digitizing operations and enabling greater efficiency. The company has also announced that Rubicon Smart City has been successfully deployed in more than 100 cities, including 8 of the top 20 U.S. cities by population. This milestone was achieved in just 6 years, with city adoption doubling year over year over the last few years. So this is one that's growing rapidly, trading at $1, securing contracts all over the world. Definitely one we have to watch. That actually reminds me of ticker IVDA. Iveda Solutions probably is a direct competitor to them as well. I'm also going to be going over 2 different Bitcoin plays. So if you are into crypto or you want to own a stock that will benefit if the price of Bitcoin and other cryptos do go up, this is definitely one you have to check out. One of these stocks I think will, really do well in the second half of 2023. So it's definitely one to watch. It's a net carbon neutral crypto mining company with decades of proven experience. Last month, their hosting partner sites completed installation of an additional 2,400 miners, and they are strategically deploying another 1,800 miners across their existing and newly identified hosting sites. And they say once they do this, they're anticipating positive operating cash flows on a run rate basis at the prevailing market level. So another thing to consider is that once summer is over, their Bitcoin production should go up as well, because, obviously these machines are very hot. They get very hot and they will overheat more in the summer. When summer is over, their production should go up anyways, but they are also adding all these other machines to their production line. So I'm expecting their growth to significantly improve in the next 2 following quarters. So it's definitely one to watch. Also going to be going over a 3D AI printing company that Kathy Wood used to be invested in and might be investing in again. She might have her eyes on it. I don't know, maybe not. This is one that is trading under $3 with $1.2 billion in total assets and a market cap of $773 million. And they pretty much have their entire market cap valuation in cash on hand, because they have around $700 million cash on hand. So this is definitely one you have to watch. They just had some positive news come out. First up we're talking about is Spear 3D Corporation, ticker ANY, a Bitcoin mining company that has tremendous potential for their next few quarters coming up. But they say 59.8 Bitcoin mined in July, down 8% from June, but up 367% year over year. So very good expansion here. And like I said, they're adding, thousands upon thousands of new installations, new miners. And like I said, with the climate change in the second and third, or the third and fourth quarter, that should help them as well. Time was 80%, which was down from June due to increase in curtailments over a month as a result of record high temperatures at our hosting partner site. So guys, once summer passes, they should really benefit from that as well. But it looks like they still were only down 8% even with that issue. It says they did 59.8 Bitcoins mined compared to 65.1 back in June. So they went from 12.8 Bitcoins mined in 1 month to almost 60 1 year later. So that's a very good improvement. So from June to July, they still mined a good amount of Bitcoins, even with issues with the temperature and everything like that. Some comments from the CEO: in July, they mined 60 Bitcoins, representing a almost 400% increase year over year and an 8% decrease from June. Like I said, they did have some issues there, so that's what happened, but still pretty impressive. At the end of the month, our hosting partner sites completed installation of an additional 2,400 miners. They were strategically deploying another 1,800 miners across our existing and newly identified hosting sites. And this is big right here. I already said it in the intro, but I must say it again because it's pretty big news. So once they achieve this milestone, we anticipate it will enable us to generate positive operating cash flows on a run rate basis at the prevailing market level. So that's very big. This is one you definitely have to watch going into the next few quarters. Considering everything I just said. Looking at their balance sheet, they have a very good liability to asset ratio. As you can see, they have $10.4 million in total liabilities. Once again, you always add 3 zeros on these, as you can see right here, but they have $75 million in total assets compared to $10 million in total liability. So a very good ratio right here. They have a market cap of $24 million, only 11 million outstanding shares. So that's very good to see. Something they really have to get is volume. They only have 34,000 in volume as of right now. Volume really needs to pick up, needs some catalysts here, some more news. But this one can easily move with some good updates. And as you can see, so for Q1 2022, they only did $3 million in total revenue with 763,000 gross profit. But they ended up but their net income, they end up losing around $3.5 million for that quarter. So they only had around $3 million cash on hand. But this is one we really need to watch, as they are, anticipating a lot of growth in the second half of the year. Except once they expand and add these new miners, everything like that, they are expecting positive cash flow or positive operating cash flow once all this happens. So we'll have to see if they can actually pull that off. If they do, it'll be very big for the stock price, obviously, expecting their revenue to go up. So this is definitely one we have to watch. Has a really good share structure. Don't know how they will take care of their cash problem, because they are losing a few $1 million. Looks like they are about to run out. They will need some kind of funding, it looks like. But their debt to asset ratio is looking very good. Definitely has potential if they do continue to grow. They're still not in the best situation. Looks like they did lose a lot of money, like a crazy amount of money for 2022. So it's still high risk, but definitely one I'm watching right now. Rubicon Technologies Inc., a smart city AI company, trading at $1.09. As you can see, in the last year, within the last year, it was trading at just under $10, and the 52-week high is $10. The 52-week low is 25 cents. So this one actually did drop pretty low and then regain compliance organically. So that's definitely a positive note. Just keep in mind that CPI data is coming in Thursday, I believe. So that will give you a good indicator of how the market will do, later in the week. So the market's kind of on edge right now, kind of unpredictable until those numbers do come out. You really need to pay attention to what's going on in the world and anything that really affects the market. These data numbers come out, Thursdays, the CPI comes out, and then some more data comes out Friday, I believe. This is really going to show the direction of the market in the short term, and really show the direction of what these rate hikes are actually going to do. So that's definitely something we have to pay attention to. Looking at this stock right now, it is trading at 93 cents, and this is pretty bad because they just regained compliance for, I believe, around 9 consecutive days, 8 or 9 consecutive days, which they had to close above $1 for 10 consecutive days. You can see back in March, this one did go under $1. And if they what happens in the New York Stock Exchange, actually this one is listed on the New York Stock Exchange, but the NASDAQ rules are pretty much the same. So if this one does go under $1, which it did, if it does this for 30 days, it closes under $1 for 30 consecutive days. What happens is the NASDAQ or the New York Stock Exchange will send a deficiency letter to the company, and then from there, the company has 180 calendar days to get the stock price to $1 plus, and they have to remain that and close over $1 for 10 consecutive days in order to regain compliance. And if they don't do that, they can try to get an extension letter for another 180 days. But obviously, this one is going to close under $1 a day, which, it's really unfortunate because it looks like they almost had 10 consecutive days staying above $1, and they did this organically all the way from 50 cents. So it looks like it's going to be a big issue for the company, and it looks like, the way the company is headed, unless they get some spectacular contract news or some kind of good PRs to push this one up, which they really have to get, looks like they will have to do a reverse split. So are losing a lot of money every quarter, even though they are expanding, growing their technology, securing new clients, securing new regions and stuff like that. But gross margins are not looking too good. They are losing a lot of money, have a lot of liabilities. So it's going to be very hard for them to, it looks like a reverse split is coming, and this one will be in a downtrend unless they get some kind of big contract or other big news to push this one up, obviously. But you can see in Q1 of 2023, they did $180 million in revenue, or $181 million in total revenue. Only had $9.9 million their net income was $3 million. So they did $180 million and still lost $3 million, and somehow they lost, I didn't really dive into why this happened, but they lost almost $200 million in Q3 of 2022. So their revenue did go down for Q2 2023, which just came out yesterday. They did around $170 million and lost around $20 million. So if you look at their balance sheet, you can see that they do have $200 million in total assets, but they have $477 million in total liabilities as of, or it might be a little more now, but around $500 million in total liabilities, which is a very bad ratio here. And this one just doesn't look that good. But they do have a lot of revenue coming in, but it's still one to watch, but one that I would not touch right now. Has too many red flags, but still one to watch. Is in a good sector just to see if they can improve or get some kind of big contracts to make them profitable or something like that, increase their revenue numbers. But they really need to work on their margins, and they are still highly in debt and losing money each quarter. So they have to change that. But now we have to talk about ticker nndm. Volume has been lacking with this company. I do believe Kathy Wood used to own the stock and might buy it again in the future. Maybe she's watching it. Maybe she has nothing to do with it anymore. I don't really know. But looking at their balance sheet, they have $1.2 billion in total assets and $685 million cash on hand, according to the year-end 2022. So this has probably changed because they are losing money each quarter. They are actually losing money, but they do have cash on hand to back it up. This is a 3D AI printing company that you have to keep an eye on. So just yesterday, nndm, ticker nndm, just announced a stock repurchase program for around 230 million shares. This stock was up around 7% on the news. One thing to note about ticker nndm, is that they did lose $200 million in fiscal year 2021. And they did lose around $220 million in fiscal year 2022. But the reason I am covering is because they do have potential and they do have, enough cash on hand to really last them about 3 more years. This could change, not be that accurate with, stuff going on internally with the company, acquisitions, other stuff that they are doing to really grow and stuff like that. But they do have cash on hand, so that gives them a very good advantage against their peers and their competitors and everything like that. So they don't really have to worry about their losses as of right now, but in the coming years they will have to if they do not get their revenue up. So they did around $10 million in revenue for fiscal year 2021, just under 50 million or at least $43 million in revenue for 2022, and I'm expecting that to continue to grow. So this is still definitely one to watch because they do have cash to back up their operating expenses for now. So that gives them a big advantage. They don't have to worry about that. They can just go full on, they can just really work on growing and expanding and everything like that. So definitely one you have to watch, ticker nndm.